things, get some knowledge, and also, adapt within the ecosystem. Yeah. So that doesn't be intro. Yeah. I also currently I'm working with I'm working with Pyramids. For those that don't know Pyramids, it's a digital wallet for for safe and convenient peer-to-peer crypto transactions, which you can easily, like if you need Naira, you understand, you can just swap your cryptocurrency or stable of a fiat currency to other fiat currency to Naira, and then withdraw to your bank account. So don't worry, later on I'll show you info about pyramids. Yeah, thank you very much.
Okay, thank you very much for that amazing intro. We cannot wait to learn. So we're just going to go right into the session. I hope everyone is here with their pen, their jotting pads, and whatever. So, Mr. Paul, the floor is yours.
All right, let me share my screen. So can everyone see my screen?
Yes, we can see your screen.
All right, so let me welcome everyone to the Mirror Cohort 1 training program 2025. Welcome everyone. And today we're going to deep dive into DeFi, lending, staking, farming, and liquidity. My name is Paul Oguntola. Yes, this, like the as topic says, deep dive into DeFi. I just want to use this the tutorial session to simplify DeFi, bring it down to the beginners level, to the point that if you want to explore some DeFi platform or some apps, you'll find it easy. You understand? Since most of those platforms have similar kind of features. So just look into our learning objective today. So by the end of the program, participants be able to number one, understand the core mechanism of decentralized finance, which is DeFi. Number two, understand different protocols for lending, staking, farming, and liquidity provision. Identify risks and benefits associated with each strategy. Like let's say you want to stake, you want to farm, what are the risks and benefits associated? It's very important. And use a popular DeFi platform. So I chose this platform because of I'm a Su fan. For those that know about Su blockchain, yeah. So they are really coming up with wonderful projects, which are most of them are DeFi. Yeah, yeah, they are centered into decentralized finance. So yeah, I'll first use 30 minutes to explain. Then I'll use the remaining time to show you guys how to navigate on. I'll just choose a different platform and I'll demonstrate, yeah, how to navigate on it. So let's start with the next, which is, let us talk about DeFi. Yes, what is DeFi? DeFi, I can't say it's a acronym. It's like an abbreviation. DeFi, decentralized finance. So what is DeFi? DeFi stands for what? Decentralized finance. It's up. Can we heard? Sorry.
Yes, we can hear you. Go on.
All right. So DeFi means using blockchain and smart contracts to do things like sending money, borrowing and lending, saving and earning interest, and trading cryptocurrency. Like how we have normal finance, if you want to send money, if you want to borrow, if you want to lend, if you want to save, it's just how finance is. But this one now is permissionless, without banks or middlemen to take control of the activities. All you just need is your phone and internet and the platform, and you can, utilize any DeFi platform. You can utilize it, without any restrictions. Yes. Let me give you an example. Instead of going to a bank for a loan, you can borrow money directly from others using apps like if those are not by if compound. Also, we have Navi protocol, others too. So, what are the main tools we before you start using any platform, decentralized finance platform, you have to have some tools. So number one is the crypto wallets, very, very important. Like MetaMask, the Su wallets, Trust wallets, Phantom wallets. For those that know about MetaMask, it's very popular, very, very popular. Phantom wallets is under Solana blockchain. We have Trust wallets and we have the Su wallet, which is also called Slush. They merge with another project and they were able to, come up with the new name Slush. For those that were using Su wallet before, now it's what we call, they changed it to Slush. Yeah. So another tool again you need to have is internet connection. As I said before, internet connection is very important. And then DeFi apps, which we call D apps. For those that what is D apps, you hear about D apps. Just like normal apps, but it's run under centralized finance. So in short, DeFi lets anyone anywhere access to financial service without needing a bank or a middleman. So DeFi is like building your own bank on the internet, open to anyone, which is running 24/7, and also it's also permissionless. So it's really nice. So that's to give you a short history of DeFi in simple step. Number one is okay, we have Bitcoin. For those that know about Bitcoin, that was Bitcoin came out, I think that was 2009, which was the first decentralized digital money, but not only used for payments. We're using it for many things now. And we have Ethereum, which that was 2015, which introduced smart contracts, which made DeFi apps possible. Ethereum. And again, that's around that 2017, 2018. This is the early, yes, this way early DeFi projects came up. You understand? Those were digital currencies, but now these are DeFi projects that came up, like Macadeo, which is the fence leading protocol. For those that know about Uniswap, yes, Uniswap too. Yes, the first major digitalized exchange. Yes, it's Uniswap. Yeah. So 2020, that's where we witnessed DeFi boom summer when there was a massive growth in users and platform and came up with not before there was that's lending protocol and decentralized exchange. Later on, gig farming came in and liquidity mining came in, and now during our listing we have billions of dollars. Those dollars are actually locked in DeFi apps, and decentralized finance is expanded to multiple blockchains. Before it was just like only Uniswap using Ethereum, but now you can see it expanding. Not only Ethereum, you can use BNB, Solana, the Solana, which I'm going to emphasize on today. So let's look at what differentiates centralized from decentralized finance. Another abbreviation was centralized finance, what we call CFI, okay, which is run by companies and banks, in which you need to trust a middleman, which is the bank, yes, or app, for you to transact. They hold your money and manage it. Yes,
Sorry,
example
you short, Mr. Paul, but we're only seeing one page of your slide. Like it's not moving. Or is this the only page?
no, I've not. I'm still at the introduction. I will see. After this, I will shift to the next. I just want to explain what is different, then we'll move to the next. Yeah.
All right, thank you.
Okay. Okay. Right. So yeah, I'll talk about CFI, right? So these are the I'll try to distinguish between centralized finance and decentralized finance. You understand? So, which is run by companies and banks, as is centralized finance. You understand? They hold their money and everything like that. We have some advantages and disadvantages related to each, like centralized finance and decentralized finance. Centralized finance is easy to use, and there's customer support available, but you don't have full control of your money. When you're utilizing something like PayPal, all those traditional banks, you have full control of your this thing because of they utilize their platform, and every transaction has to come, like they have to, for you to transact, it must be middleman, you know. Yeah. Why decentralized finance is run? under the blockchain and smart contracts, which you have control of your money and your money using a crypto wallets, which is also open to everyone. Like I said, once you have internet access on your phone, and yeah, you can just navigate on any centralized platform, and you have full control of your phones, and it's open 24/7. So I just really just use this one to differentiate between centralized and decentralized finance. DeFi also have many use cases which you can use it for payments, sending of money, lending and borrowing, and also as we said, we have Uniswap, which is the first digitalized exchange. Like if you want to swap your cryptocurrency, you understand, instead of to use platform like Binance or BitGet, you can also use DX, which is to also swap your cryptocurrencies as well. So yeah, let me move on to the next. We have DeFi lending. Okay, so now let us enter into DeFi lending and explore what is the meaning of DeFi lending. So DeFi lending and borrowing on the blockchain. Let us explain on that. You can actually lend crypto to earn interest. So now, when you lend, there's a platform under the name protocol. Try to remember it, which they you have to supply. When you say lend, like supply your assets, which can supply your assets, and then there will be a return, like interest return on it. Yes. And once you supply, there's interest rates which we then earn. Also, you can also borrow crypto by locking up your own by locking up um your own as a collateral. Like you can actually borrow cryptocurrency, but before you borrow, you must have a locked up collateral. Like and also regarding this collateral, it's very, very important that you understand it because of there's what we call liquidation, in which once you borrow, you understand, and the assets, let's say part of the asset went down, it can be liquidated. When you mean liquid, that means that everything does go. So if you're trying to utilize any lending platform, lending borrowing platform, you must have to understand the how it works. You must deposit more than what you borrow. Let me give you an example now. By depositing $150 to borrow $100. So this $150 now, as I say now, is just like a collateral. Like let's say that now you go to the bank, you want to borrow a loan. You understand? You must put something that yes, that in case if you are not able to pay, some that asset will be used towards cover it, which is the collateral. So the same thing as the start finance too. There must be something that you must put down as the collateral before you then borrow. So that also applies here as well. So the thing here is that if the value of your collateral drops too much, it gets liquidated and so to repay the loan. So you have to understand that each platform has its own we call it risk level. Yes, so you have to check the percentage of it before you then put in your collateral and borrow. You understand? So that is very, very important. We have protocols that like we have Navi protocol, which you can also supply your assets on that suit. You understand? We have if we have company. These are the platform that have this kind of features or services which you can lend and borrow. When I mean lend, I mean supply of your assets, you understand? And then you earn from it. So yeah, let me move on to the next, which is staking and yield farming. To me, this is the sweetest part of DeFi, in which you stake and you earn, or you provide liquidity too. Yes, and you also lend, and you also earn as well. So we have. Let me explain what is staking for you, for everyone. Staking means locking up your crypto to help run a blockchain and also earn rewards. It's like earning interest by supporting the network. You get paid in tokens and help keep the network secured. So it's just like um locking up. Let's say that now the open staking platform in which you have to stake your SU for you to earn. You understand? And there will be like an interest rate, let's say like 4% interest rate or um let me not just say let's just return 4% return. You understand? So there's every platform has its own percentage of return. You understand, attached to it. So it's for you to look at it and then see this way of you calculating it as well. Let's say that now how much am I going to get per day or per week or per month or per year? You understand? So every platform has that. And we have different types of staking. We have the native staking, delegated staking, and liquid staking. So now what is native staking? It's where you stake directly on the blockchain. You understand? Let's say that now you want to stake your SU token. You understand? You just stake it directly on the blockchain. It also has the best reward, but you must manage it yourself. When you manage yourself, that means that you must be monitoring it, yes, because of um because of price volatility. Yes, price volatility can also affect the coin as well. So let's say that now you stake 100 SU. You understand? There's 100 SU is estimated at, let's say, $300. You understand? And you went back to check and you are seeing like 250 or 200. It's not because of the this thing, because of the price of the, the, the token as well. That's drop and stuff like that. So something like that you need to check time, yeah, maybe daily or yeah, anytime you're free. So you have the second one, which is dedicated staking, in which you choose a validator to stake on for which is easier. You understand? It's easier and you see any watch. So now it's where you dedicate your token. You understand? If there's a platform that they have all these validators, which you then dedicate your tokens. I mean, you stake under them, and you will earn from your staking. So there's always, as I said, there's always a percentage return. You understand towards it. So you have to just check the platform, check the return, and you see your yield. You understand? You see your yield from it. Also, we have liquid staking, which is the third one, in which you stake your tokens, but you get a liquid token in return. So, for example, now let's say that now um, you stake your atom to get what we call the ST atom, or you take your SU to get what we call the V SU. Yes, now these are examples of what we call liquid staking. So, what are this thing? You keep earning while using your funds in DeFi, and it's also more flexible as well. So, what are the platform use? Yeah, like for the Atom, we have the Cosmo Group. For SU, yeah, we have Cetus. For those that I will show you about after explaining all this, I will demonstrate it how to use Cetus, how to use Navi protocol. Yes, for you to then stake. So the next one is farming, which I'm just put as yield farming. Yeah. So it's a way to earn rewards by putting in your crypto into the Fry protocol. You provide fund liquidity. You provide funds to the platform and return you earn more crypto. It's like putting your money in a savings account, but with a higher reward. But what differentiates taking and farming is that farming has higher risks but higher reward. While staking, the risk is quite minimized as compared to farming. Because of once you're providing liquidity, you understand, you are kind of like pairing. It's not like a single token. You understand? You're just pairing two tokens together. Yeah, you're just pairing. Let's say that now you say it's put under SU and USDT liquidity pool. So you have to get the SU, you have to get USDT, and then there's a ratio in which there will every class has a ratio, like the number of SU and the number of USDT, and then we put them within the platform. You understand? I put them within the pool. Yeah, before you start any reward. So we have several strategy. You understand? We have the single and the dual token farm. So now we have the single token farming. If you stake one token on the platform, it's less risky and simple to manage. This one now, I understand the single token farming is somehow similar to that of staking. You understand? You just one token, you just take the token, you're now on the platform, and then you earn rewards. It's less risky and also simple to manage. While we have the dual token farms. When I say dual token farms, it's not one token. You're looking at pairs of tokens, like in which you stake a pair of tokens, e.g., like BNB USDC or BNB USDT in a liquidity pool. You will earn good rewards, but as what higher risks. Uh, yes, there's one. We call it for those that are under that knows the ecosystem. It's what we call refinance. They have a new name now. That is a good staking platform. That is the best staking platform under the new ecosystem, which you can then um, stake your tokens or create liquidity pool, and then you earn rewards. Apart from this, the dual token farming, as I was saying, dual is two, right? But in that platform, we can actually pair up to four tokens. Well, there was one I saw USDT, USDC, EUSDT. You understand? You can pair up to four, sometimes five, sometimes three tokens within a liquidity pool. So that is another one. I just give an example. Apart from this dual, we have they can actually pair more than two. You understand? So for me, actually, I love to pair. I don't like to take too much risks. You understand? I don't like to take too much risks. So I try to stake under we have what we call the stable pools. The stable pools, you understand? Which you they pair stable um cryptocurrencies like USDT, USDC, and then you still earn rewards. The rewards may not be that high as compared to the one of that's not a stable pool, you understand? But yeah, it's less risky. You understand? In which the price does not shake, it's not due to the market condition. Now, it's very important for me to explain what we call impermanent loss. It happens when the price of your stake tokens changes a lot after you add them to liquidity pool. When you withdraw, you may end up with less value than if you had held it within the platform. So what this one is trying to say is that don't hello, okay. I can be heard. Sorry, can I be heard?
Yes, we can hear you.
Yes. So now what I mean about impermanent loss is that let's say that let's say you stake other this BNB and let's say we use another cryptocurrency that is BNB and SU. Let's say BNB and SU, yes. There's a liquidity pool, BNB and SU liquidity pool. I stake under it. And then you know that these cryptocurrencies, the BNB and the SU, they are not stable coins, you understand? They change to the price volatility. So you can see that once the price of the BNB or the SU goes down, surely you can expect that the amount you put there actually is going to be made the same. So it will surely drop. And also if the price increase, yeah, surely the amount you put inside will also increase as well. You understand? It will also increase as well. So it changes. But the thing is that even though the price drop, it's not like I have to remove my this. Once you remove it and you swap it, that's where the person make a loss. You understand? So it's better for you to just keep it and then continue any rewards. Surely the the cryptocurrency, you understand, it will surely appreciate and you surely get double double profit actually. That means that you get your normal reward profit and you get the profits from the token itself, not from the one you're going to get from the platform. You understand? So that's why you call it a permanent loss. It's permanent loss when you sell off. You understand? So we have protocols like Refinance, PancakeSwap, Cetus. Yes, so Refinance is built under the Near, sorry. which is good for cross-chain farming. We also have the Pancake, which is mostly popular under the BNB chain, which is also, yes, I also have farming options. We have the Settles, which runs under the SU blockchain, known for efficient trading and liquidity. If you notice something now about centralized platform like under the cryptosphere, we have the Binance, we have BitGet, we have Bybit. They are trying to incorporate DeFi, yes, and decentralized finance, DeFi, yes, features within their platform. That's why you see they're creating what we call Web3 wallets. If you look at it now, when you open your Binance, you see um, the exchange, you see Web3 wallet, you understand? Because of the notice the importance of DeFi. So they can't actually use that within the centralized platform, which is the exchange, but they would rather create another feature, which is the Web3 wallets, to incorporate these DeFi services. That's why you see that once you open your BitGet or your Binance, you see the Web3 side, which then you put your seed phrase and then you're able to utilize the DeFi services. So that is a big one for crypto exchanges. Yes. So let me explain more on DeFi liquidity pools. Before you um, put in your funds on any pool, any DeFi pool, it's better for you to understand some things. You understand? You have to understand some things related to the AMM. What is mean of the AMM, which is the automated, market maker. It replaces the human buyer and seller within the smart contracts. So this automated market maker, you understand, it's one that is just like able to recalculate your your profits, calculates your the amount, you understand, the value of your token within the liquidity pool. So liquidity pools power AMMs, user deposit tokens so others can trade. You can earn a share of the trading fees as well when you provide liquidity, and there's no need for other books or middleman. Um, I'm still trying to understand the terminologies regarding this fees. Because when you are trying to create a liquidity pool, like you are trying to put your money into a liquidity pool, there's what we call the fees and what we call the reward. You understand? The fees, if you, so for those that utilize, there's one platform called Bluefin, and that's a blockchain. They specified it clearly there. Let's say you're staking under SU USDC, liquidity pool. We have the fees. The fees are the tokens you put in, which are the SU and the USDC. While we have the reward, what are you getting if you have to stake, if you have to provide liquidity? You will see them separately, which are, okay, let's say you're going to get deep token, you're going to get USDT token, you're going to get this. These are the reward. You understand? So I will show you after this. I will show everyone how to check the fees and the reward. So yeah, the protocols are still the same. The protocols are still the same, which are the blue fee settles, so let us explain the pool types. It's very important for we to explain the pool types. We have the 50-50 pool. The 50-50 pool, as you said, just like equal amounts, 50-50. You understand? Equal value of two tokens. Let's say that now we have to create liquidity for SU and USDT. So if the pool now is this 50-50 pool, that means that if you divide the money, let's say that now you have $100, you understand, to divide it into $50 of SU and $50 of USDT. You understand? It does divide it like that so that it can be 50-50. Also, we have the weighted pool. So this one is quite different from the one of 50-50. It's unequal ratios. It depends on the platform. Let's say that now its ratio is 80% of this token and then 20% of the other token. It's still the same, it's still balanced, but it's not like it's 50-50. It's equal amount of that token and of the other one. You can take 80% of this token, maybe like the same 100 now. That's $80 worth of US of SU, sorry, and $20 worth of USDT. You understand? So that's one is another type of pool. So it depends on the platform actually. The platform I say, okay, we're doing 50-50, or we're doing this kind of ratio, maybe 80 to 20 or 40, or it depends on the platform actually. And then we have the stable coin pool. So peer stable coins like USDT, USDC, as if you remember, I talked about refinance, then pairing stable coins like USDT, USDC, EUSDC. You have the wrap tokens as well. You understand? So there are stable pools as well. So in short, liquidity pool let people to trade without order book. AMMs use smart contracts plus what liquidity pool for them to what calculate to their no every platform has its own AMM which it automatically calculates the balances to the world and everything. So yes, let us move on to the next. Yeah, okay. So let me go on with the practical demonstration. Very important. Let me go on with the practical demonstration. As wow, time has actually gone. Let me. So hope everyone can see my screen.
Yes, we can
Yes,
see
sir, you
it.
can see it.
So as I said earlier, the tools needed. You need what we call a crypto wallet. You need what we call internet connection. So I have my internet connection and I have my wallet. Yeah. For those that sorry, I'm using a laptop. You can actually download all these applications on Google Play Store or Apple Play Store. If you have a laptop, go to your Chrome store, Chrome Web Store, and get the extension. It's very. I'm not going to navigate on that. Yeah, it's very simple. So here is my MetaMask. Yeah, here is my. Uh, this is Phantom Wallet. For those that know Solana, yeah, this is the major wallet for under Solana. This is my turn. So let me just navigate towards um, Slush, which is for those that know Su Wallet. This is the new name now. Slush, the Slush Wallet. Put it that way. Yeah. So when you're creating a wallet, you can import your passphrase or can create a new wallet anyone you want. And and during the process of creation, there will it's important to put in a password. Very important. You understand? Well, they won't allow you to create it without a password. So yeah. So it goes along with the creation process. Yeah, let us give it a little time for it to load. And it's my network. Yes. All right. Um. Yeah. So this wallet here now, I deposited once 1.3 so let's say that now you create a wallet that have so just head over to like Binance or head over to BitGet, buy so and then you can just send it to your slush wallet. Let us navigate towards the apps. Really are very important. So this where you can navigate towards this side. I'm trying to see how I can make it bigger. All right. Trying to see how I can make it bigger. So let me these are the apps under the Su ecosystem. More to come. This was the beginning. Yeah. So let me navigate towards Cetus. Cetus, where are you? Cetus, yeah. Let me close this. Right. So waiting for it to load up. Let me see how I can minimize this. Okay. Trying to minimize this. All right. So this is Settles protocol. The first thing you need to do now is to sign in your wallets. Well, seems it has gone off again. Let me try it one time. Mm, right. So this is Settles protocol. I'm going to show you how to. I'm going to show you the liquidity pools. I'm going to show you how to stake. Yes, very important. How to create liquidity. Yes, and yeah, the IPYs and stuff. So trying to let me see. Let me disconnect. Yes, I want to connect my. So you can see it right here. You can see the wallets. Okay, that's why it's very important for you to have a crypto wallets on ground first before you start exploring several decentralized applications, which are the DApps. So yes, proof. Yes, I've connected my wallet now. So for every decentralized um, protocol or decentralized platform, we put that way. We have several services. Remember, we talk about lending, we talk about borrowing, we talk about trading. Yes. So now this platform now, this is what we call a decentralized exchange. Yes, where we can trade selected. I just say it's all the listen. No, it depends on the one that they imported, but any cryptocurrency under the sub blockchain, you understand, from that sub blockchain, they're all here. Like you can see the USDC here. You see some other tokens here. You see the tokens. We have the bulk, we have the VSU. You understand? We have other cryptocurrency. So let me show you guys the. You can see the pools. These pools, as I described, liquidity pools. You understand? We have the farm, which you can then stake your up, which is your once you pair token. Apart from you creating liquidity, the pair token can also be staked to earn more rewards. And these are the votes which can lock up your assets to earn more reward. So let me just navigate on the post first so that we can explore the liquidity pools under status. All these pools here, you understand, the other DApps like the Bluefy, the Kra, other DApps that are under the SU ecosystem, they also have the same kind of features as well. Don't worry, once we navigate, you can see navigate on Bluefy, so we can also see how that one is also structured. Let me try to minimize this. I guess I can go. Yeah. So you can see the let me shift this up here. So yeah, the liquidity pools. As I said, we have the SU USDC liquidity pool. We have DMC USDC liquidity pool. We have several pools here. That you can see here now, they're pairing SU with a stable coin. And this is what we call the APR, which is the percentage of your return. You understand? If you have to stake. So this API now, you understand, it's from using the protocol, using the AMM, which is automated market maker, to help to automatically calculate your rewards, your the fees needed and everything. So that one will help to calculate, and you can actually be checking your like day by day. You can actually be checking your rewards. Like you see that now, it goes up from $1 today to surely show. Yeah. So let us try to create. Okay, we have this first one here, which is Su USDC pool. Let us try to create. Let's just try to deploy our tokens here, so I can create the pool, Su USDC pool. So now we have the Su and we have the USDC, right? So if you recall, we have we have Su in our wallets. Yes, we have Su in our wallets. So let us try to swap some part of it to USDC so we can then create um we have use like okay, let's try half. Yeah, remember you have the 50-50, you understand, which you don't want 50-50, like that means that 50% of the SU, 50% of USDC. But let's just try to swap this first. Then we enter the pool and then we'll now see the ratio of which you want. Let's just swap this first. So now I'm now set this platform for it to like swap our cryptocurrency. Apart from centralized platform, you can also swap here too, but it's limited to you know tokens under the SU blockchain. So let us swap that and prove the transaction. So once we swap it, we can now create the pool. So now we can have both the SU and the USDC. So that has been done. Let's enter. So you navigate here towards the pool and let us yeah, let's add liquidity. Let's add liquidity. So this is it here. Can I tap on it? Sorry. Let me shift this over here. Let's give it some seconds here. That's over. In some platform, you understand, in some platform, like here now, we have the SU USDC, in which you can just put the amount of SU, amount of USDC. In some platform on that SU blockchain, we have this single, you can actually just, let's say that now we have only SU. I don't want to go to the stress of swapping it to USDC for you to then add liquidity. You can just use a single token, create the pool, you understand, add liquidity within the pool, in which it will then automatically slash it, like it will share it based on the ratio. Instead now we have only $100 worth of SU. Or let's say you have $100 worth of SU. Yes, let me use that way. It's a way to swap it to USDC. You can just use the single token and then add liquidity. From the platform, it will then share it, like it will then share it as based on that ratio. Maybe share it based on ratio. Let's say it's keep $80 worth of SU and $20 worth of USDC. But if to see the total amount, which is $100, you understand? Rather than you swapping it and then adding liquidity. So we have a platform on that. So I'll show you the platform, call it CRA, which you can just use a single token and then add liquidity rather than you swapping it, sharing it, and then adding it. Yeah. So let us okay, just use 0.3. Yes. So it will then, using the AMM, you understand, it will calculate the amount of USDC to pair it with. Let us wait a little. It seems it's still loading. Let me try this. Let me use half. It's supposed to pair. Let me see. Okay, let's wait for it to pair first. It's supposed to show the amount of USDC here. Let's wait some seconds. Maybe just not show, refresh again. And let me retype. Let me use another one. Let me use 0.2. Let's see. Okay, which is not appearing. Let me switch. Let me use it. Let me see. 1. Okay. Let me try it again. Let me just not go. We can see the class and that platform. Yes, it's supposed to show the let's say now you have to put in one USDC. It's supposed to show the equivalent of SU for you to add liquidity. But it seems network is still loading. Okay, let's give it some seconds. If it does not load up, we'll try another platform. Yeah. Let's give it some seconds. seems it's not loading up. Okay, let's refresh. Let's refresh. Let's refresh. Let's refresh the ad again. Mhm. Okay, let's try this. Okay, yes, let's see if it's open up. Oh, yeah, 0.2. That is it. So you can see that once I type 0.2, it showed the amount of USDT, I mean USDC, sorry, that it will pair with. You can see it here. Let's add now 0.5, sorry, 0.5. You can see it, right? So it shows the equivalent amount of USDC for you to pair it with the SU. And you can see here now, I can add liquidity. Let's say that now it's over. Let's say that now I'm pushing in, let's say 1 SU, which I do have. You can see the pair, right? 1.8 USDC, but it's showing sufficient SU balance. Cause why? I don't have that kind of balance in my wallet. So that's the fun part of it. So just work within our limits or what we have, sorry. Yes, let's add liquidity. Yes, let's add liquidity. Does not waste time. It's fast. Does depend on your network. If your network is not that strong, it may take some like minutes. If your network is strong, it takes some seconds. So let us wait for it to load up. Yeah. Come. Yes. If I again, if you're using your like the slush app or your phone, it's actually faster. Like if I want to do, I personally, if I want to do any transaction like this, I just use my phone swap it. It's faster on phone than on PC. But again, internet connection is very important. Yeah, the what is strong, I think, both on phone and your PC, yes, it should be fast as well. So, sorry, I was supposed to even tell you about this. You can see the percentage. As I said, this is weighted pool, in which is not the one that requires 50% of this token, 50% of the other token. It's a certain percentage of this, a certain percentage of that, but it's still balanced at the 100%. Yeah, still at the balance rate. So you can see it here. When you add 58.9 with 41 points, it gives you the same 100%, but it's a shared ratio. And this is the APY, this is the annual percentage return on your investment. I already say investment, yes, on the pool. Yeah. So now let's say that now you have created the pool and you want to check the pool you created. Yeah, you can already liquidate on the pool. You want to check the pool. Yeah. You can just come here to my position. You understand? You can see it here active. You can see the value here 1.36, and you can see the pair tokens, which is the SU and the USDC. You can see it right here. So this is I've now just the easy process. I've just added liquidity under the SU and USDC pool, liquidity pool. This is just how it is, very simple. And you see right here in the penny fee and see right here in the penny reward. So let me move off. So now you can see it right here. So now, as I said, the pending fees. When you look at the report and you try to understand what the meaning of the pending fees or the fees actually, the fees is the tokens that you paired or you added within liquidity pool, which are the SU and the USDC. You understand? Why the reward is what you will get in return from you adding liquidity. So the rewards are settles and so means that if you are seeing, let's say that now your reward now is $1 here, you will see it shared. Some amount will be in settles and some amount will be in SOL tokens. You understand? So that is it here. That is me of penny the fees, sorry, the fees and the reward. The penny means that it's yet to be. You understand? Once you see it, yeah. And from here now, you can just tap on it. It's that now you want to you have gotten up to $1, for example, and you want to claim, just tap on it, see it here. Here it's showing the reward is less because of I've not yet. You just created the pool now. You have not earned any reward yet. So, but if there's any reward here, you just press or claim, and that is it. You will approve transaction and it will be sent to your wallet. You just see it in your wallet. Yeah. So it's very simple, very easy to navigate. So let us look at the farms. Yes. Okay. The farms also has its own reward. Yeah. But I focus on liquidity because of I know that it's of high risks, but the return is good. Yeah, return is very good. Let's look at the farm and the yeah. Let it load a little. If it does not load fast, you can still refresh. Yes. So these are the farm. These are the live farms in which the one you can then once I've created the pool, you understand, you can still stake it here, which you can still earn some good reward. Actually, the reward is not the percentage is not the annual percentage return is not as high as the one of liquidity pool, but you surely earn from it. But it's not as high, but also it's less risky. You understand? So we have here is your farm. In case if we have um added after added liquidity, in case you have take your LP token, it will show you. You understand? Just like how we have this one that this pool side um after we have added liquidity, we can then check our position. This position is the liquidity pool we added liquidity. The pool we added our funds in or added liquidity. So yeah, you can just check it. Yes, and then claim. So here is the swap. I don't want to go too in depth into it. It's just a beginner mode. Beginner. In case you want to start, you can just start with this platform. Very easy to navigate. Let us head over to another platform again. Where is my so now we talk about lending and borrowing. So let us look into that as well. We have a platform that is sub blockchain. We have Navi. So in which you then can supply your assets and watch can borrow as well. Yes. So this is another platform that is sub blockchain. You can see it here, the lending markets or lending market here, which can lend and borrow. So let us it's still loading. What we need to do is connect our wallet, but let it load first. Let's give it some seconds to load so that we can then connect our wallet and then let's see what one or two things you can explore. Yeah, do. Let us wait. Let me just connect my wallet. Let's see, is it going? Okay, still loading now, still loading now. Let's give it some seconds. Yeah, so this is other so actually. For those that want to explore other blockchain, you understand, you can still explore it. For BNB, the to me the number one DX, understand, decentralized exchange, which can still utilize the DeFi platform of creating liquidity pool, lending, borrowing, and stuff. We have the pancake swap. For those that know about pancake swap, you can actually um, um, stake. They have several liquidity pools there as well, which you can stake your BNB, you can stake your cake, you can stake there are multiple currencies there, which can stake and earn rewards as well. For Ethereum, we have the Uniswap as well. That's the centralized exchange which you can swap your token. You also have some other features in the game which you can explore. and you can also earn from as well. Yeah, for those that the specialized platform, they have the Web3 um, wallets, which you can then explore some DeFi services, features there, and also earn as well. So, but for this tutorial session, there's not much time. I wish there's much time I would have, yeah, allocate what's per case swap and then see how we can do it. But it's good that we look at yeah, the protocols, the DeFi protocols, yes, under the sub blockchain. And some different platforms, yes, that we can do allocate on it. Okay, this thing is taking time. Let me refresh a little. Let me refresh a little. Comment. Okay. Okay, it's loading up slowly. Since it's my network. Oh, right. And again, so this platform, this will have all these campaigns which you can then earn from it. Decide, okay, this campaign need to supply this amount of assets, which you then earn some amount. Like I've participated in up to 3 campaigns, and I've earned some like sharing. They give each person $13. Some they give each person $5. Once you utilize the platform, let's say that you swap on the platform or you lend on the platform, you understand, they will be included within the campaign, and then you will get the rewards attached as well. You understand? So this is just one of the campaigns they have with OKS. There's several campaigns that I've done before, and that's also open the platform to just pop up like I did here. Okay, trying to what's going on. Okay, it's opening. Yes. Okay. Um, Let me connect my wallets. Yes, let's just let's wait for the pop up. Has it popped? Okay, it hasn't. Let's wait for the pop up. Okay, let me just for the pop up for me to connect the wallets. Let us talk about all this. So this is a lending DeFi platform which you can lend your token and watch. You can also borrow as well. Remember, talk about collateral. You have to have a deposit within before you then borrow, and the deposit is always higher than the amount you borrow. You cannot allow it to borrow more than the collateral. Maybe some platform may allow, but for this, no. So let me connect. So yeah, I want this connected, and you can see this is deep. Yes, this is the AP supply APR. This is the borrow APR. Where is supply? You're lending. Yes, where you borrow. Um, where is supply? You're like depositing your tokens within the platform. You understand, for you to then earn reward. And then where you borrow, you understand, just like try to get some tokens from the platform for you to then earn reward. You understand? So we have the deep. You can This is the APY lend, and this is the APY for borrow, and this is for while, this is for VSU, and we have several under here. Let me try to okay. Yes, we have several under here as well. So this one are just the reason why these are looking up here, because these are the best APRs. Yes, I have others here, but they're not as good as this. And sometimes they used to give all these boosted APRs. So they can just boost it like, okay, before we're giving, before it is 30% or it's 2%, but now for this period of time, by boosting it to 34% and 44%, you can see it here now. This before the 30% and now 37%. So I want that done with the promo to go back to the to the initial APR. Yes, so you have to be very fast. When you are doing this one, then when you're done, you can then shift to another token again and then earn from it. Okay. Did I have enough SU to lend? Okay. Let us utilize their decentralized the swap. Yeah, decentralized exchange is swap. I want to swap some part of my SU to deep. Let us try to supply deep in the platform. Let us utilize let's just swap. Still not that response. Don't know why. Let's do it again. Alright, alright, alright. Also use. Alright. Let me just check. Okay. Let us just okay. Let's just use our SU. Yeah. So let us supply our SU since we have SU. You understand? But you can still swap and then you can swap from your SU to deep and then you can utilize all this. But let us for the call time is draft time. Time has gone. Let us supply SU. Yes, let's supply SU in the platform. You can see it here. Let's press supply. Let's see supply 0.1 SU. I just have 0.33. So let's supply 0.1. And this is the API rate. It is 4%. It is supply. And on this platform, you supply the rewards. Yes, the rewards will be calculating every hour, every day, or every minute. Yeah. So it's up to you to come and check your reward. Yeah, let's wait for it to so you can approve version, and then after this, I will. If there's any question, I will leave it open for everyone to ask that question. Let us just approve this version. So now, yes, we have supplied or have lent assets on one of the top lending DeFi protocol under the SU blockchain. Okay. Hope I can be heard. Like I've now been talking
Yeah,
since I didn't even.
we can hear you.
All right. So I'm running up now. Sorry for taking time. I'm running up now. Let's just wait for the instruction to get approved. Then I will leave it open for question and answers. For questions, yeah, from the participants. Yeah.
Hello.
Sorry, can you?
Yeah, good evening.
Hello?
Yes, we can hear you. Are you done with the presentation?
No, I'm not. Okay. Okay, ask your question. Ask your question. Let's leave it because the time is going and kind of since we're having network issues here. Just
Okay,
ask your question,
somebody,
please. Let's see if the
somebody
question
in
is good.
the message section asked, dropped something. I think it's Hamza. He
Okay.
was saying if they can get a more practical demonstration or something. But the truth is that DeFi is a really, really, really broad topics, and our guest speaker has limited time. So we're going to upload the video of this session on YouTube so you can go through it during your free time. And also maybe in the future we'll host other course session where we're going to treat DeFi for just one full week so everybody can get a better understanding of DeFi. So Hamza, I hope we've answered you. Any
Yeah,
other?
yeah, yeah. Yeah, that was my concern because this is actually very, very interesting. This is a way that everybody will make money even
Yeah.
without
Yes.
uh, being stressed like that. So I'm kind of very, very really interested in this. But like this, that they are taking it, we won't get it very clear to
Okay.
be able to navigate ourselves throughout. That's why you made that comment.
All right.
So maybe in the future that you said we'll be
Yeah.
looking up to that. Forward to
Yes.
that. All right. Thank you so much.
You're welcome. We might also drop the slide that he used for his
All right. Thank you.
presentation
All right. All right.
and go
Thank you
through
so
it.
much. Okay.
So, Toluwasi, I can see your hands up. Can you please unmute yourself and speak?
Okay, good evening, everyone. Um, Thanks for today's lecture, Mr. Paul. I really appreciate. My
Right.
question is, you talked about
Right.
farming earlier in the section. So I want to ask, what's the difference between farming and airdrop? Because I do hear that most people say once they are farming, they are looking for airdrop. So what's the difference between airdrop and farming?
Yes. So airdrop, you understand? I can just look at airdrop as a broad um as something broad. Yes, because of airdrop can come in different ways. It's just like the projects try to give out their tokens before they launch. That is airdrop, you understand? So now it can come at different way. It can come at farming, it can come at you utilizing their platform, the earn rewards. It can come by you maybe tweeting for them, which you can earn reward, you understand? But farming, you understand, it's just like a way in which they can then issue out the tokens, just like a way. We have different ways in which you can offer the airdrop to the public, you understand? But farming can be a means. Like I think there's a token. There was one token that was about to launch. Like they said that we should stake your SU for you to earn this token. You understand? The token will be showing on your wallet, but you can't actually exchange that token. The token is just like an airdrop. You understand? Like there's one that they did under this Navi protocol too as well that I earned from it. I earned some amount from it, which I don't even know the value of it. I thought I've already earned this token. Let me just keep it there. But when they now launched, and I was able to exchange it for a value. You understand? For exchange it to USDT. They are now know the value of the token. You understand? So farming is just a means for them to issue out the airdrop to the public. There are several means as well. You understand? But farming is a means by which you can issue out the airdrop. And remember, the airdrop does not have value until when it's launched. Then you can then swap it. We have different airdrops now. We have the one of Blum that listed recently. You understand? They didn't utilize this farming stuff. They just utilized their own platform and they issue out the airdrop. And so if any project want to roll under that is through blockchain, they can just say, okay, they can enter into agreement with Setus or Navi protocol that please, so let us I want to launch my token, but I want to utilize the platform so that in case that once they deposit this amount of token and they stake it, it can be any my own token. You understand? They can just enter an agreement and that will be negotiated and to be done. You understand? So it does that's to my understanding. Thank you.
Hello.
Yes, we can
Hello.
hear you.
Okay.
Yeah.
Staking and farming. You said staking is more riskier, right? So because uh,
No,
hello,
staking is less riskier. Less riskier
less
than
riskier
yeah.
than farming. No, I mean
Than
between staking and farming.
farming, yield farming.
Okay.
Yes, I'm with you. I'm with you. I'm with
Okay.
you.
So now, if you stake your, let's say you stake a token that you have, and the market is volatile, your staked
Yeah.
funds will also maybe appreciate or depreciate in regards to the volatility of the market. Do
Yes.
you
Yes.
understand? Okay, so that's what make it riskier.
Let me explain. For staking, you understand. I'm looking at staking as using a single token. That you take a single token. Let's say you just take only SU, like that. You stake the SU, and then the SU
Okay.
price reduce. Surely the value of the token will also reduce. You understand? When it increases,
Yeah.
increase. When we talk about yield farming, you understand. You are looking at broader liquidity. Providing liquidity now is under yield farming, in which you are now taking more than one. You're taking SU and deep, in which you're taking two cryptocurrency that is prone to market volatility. So when deep goes down and SU goes down, you can see that the kind of drop that will happen is going to be heavier than when deep goes up. and somebody is utilizing only one token. You understand?
Yeah,
So that kind
yeah,
of drop, and also the risk of being liquidated again is another one again. Where we look at all these lending platforms, you understand? When the price of the token you use as a collateral, you understand, drops below the standard, you understand, it should not be used to cover up any loan or anything like that. So
okay,
the money is gone. So
okay,
there's some risk attached to all these this thing, platform. There's some risk attached. That's why you see yield farming as higher yield farming, like adding liquidity, provide liquidity and stuff like that, as higher APR, that is
APR,
annual percentage return, than the normal
yeah,
stake. Let's say you just take only SU, just see SU 4% return,
yeah,
only 4% or 2%. But all these liquidity pool, you see them 40-something%, 600%, 500%, very
okay,
high amount
yeah,
of percentage. What they
the
don't, that
risk
the risk is
involved.
high.
Yeah,
Yeah,
yeah, yeah, yeah.
seriously.
I get it now. Thank you so much.
So hope that answers the question. All right.
Yeah,
Thank you.
yeah. Thank you so much.
Okay, thank you very much. So
Thank
I
you.
can see Toyosi hand is raised. Guys, Toyosi is very active. 2 times we have hosted a session this week. He has asked question for each session. So Toyosi, please unmute yourself and speak.
Okay, thank you very much. Thank you very much, Mr. Paul. I want to ask
Yeah.
just two questions. The first one is I really want to understand what they call pre-sale and IDO. Can you get me, sir?
Okay. Wow. Yes, I'm with you. Okay.
Yeah, I say I really want to
Uh,
understand pre-sale.
the almost yes, I'm with you.
Okay.
Hello. Can you hear me?
Yes, yes. I'm with you. I'm with you, sir. Can you hear me?
Yes, I can. I can hear
Can you
you.
hear me?
Yes, I can hear you.
Okay, I
Okay,
said
let me answer your question.
pre-sale and IDO.
Yes, I'm with you.
Okay, I said I want to really understand the difference or the meaning of pre-sales and IDO.
Okay. Well, it's actually out of DeFi, but don't worry, let me answer it. Yes. Thank you for the question. So, for pre-sale, you understand, it happens before the public launch. You understand? It happens before they launch the token. Let's start down. Where is this people now that launch? Let's say, let me give you an example of Bloom. You understand? Before they launch the token, even Bloom, those people farming all these airdrops. You understand? Before they launch, they will issue out the token. Let's say that's what we call pre-sale. Why IDO? The form of IDO is initial DX offering. So that is at the time of the public launch. That's why they initiate IDO. So this IDO now is also another form of crowdfunding. Another one is where it happens. You understand? So the pre-sale now is on the platform or the website, which is privately owned. That's where the pre-sale occurs. But the IDO, you understand, sometimes it occurs on, let's say, like a DX, in which they can then buy the token on the DX. One example is I don't know, for those farming. There's one airdrop. You understand? What they call it again? Is it Work Dogs? You understand? They listed on StoneFi, and then they are trying to use that one. So they are using StoneFi as a DX to initiate this their IDO. You understand? So um apart from the pre-sale before the launch, you understand, at that time of the launch, you understand, you can initiate this crowdfunding utilizing IDOs. You understand? So other um, differences between the two is the access level. So for the pre-sale, it's often limited to early investors or whitelisted users. You understand? Why the IDO is open to everyone. So now by seeing pre-sale, it's kind of restricted. It's not mostly open to everyone. They used to whitelist some people, you understand, for them to get the tokens. Why the IDO is open to everyone, you understand, make it public to everyone. So that is just for my own capacity. That's what I can say that is the difference between the two. But you can see, look further to get a maybe more clearer, differences. Thank you.
Okay, thank you very much. Guys, time is spent already.
Sorry, can you hear me?
Yes, we can hear you.
Yeah, I'm with you.
Okay, so our time is fast spent already and we have limited time. We're just going to take three more questions and then call it a day. If you have any further question, you can ask on the group and then I'll give you his at so you can tag him. He'll answer your question. In fact, anyone is going to answer your question. So from the comments, Nimat is asking, how are interest rates determined in DeFi lending protocol?
Okay, the interest rate. No, it's determined by the platform now. It's determined by the platform. You can't actually control the interest rates. You understand? It's determined. Like you see that now. Um, Let me give example. Let me just give example of this. I hope everyone can still see my screen. If I
Yes.
talk about interest rates now, you understand? We're looking at some sort of lending, borrowing. Okay, I can see my. All right. It's looking at some sort of you lending and borrowing. You understand? The platform will set out its own percentage as interest, you understand, which you are going to benefit from. You set out some percentage. So it's left for you now. Like if this person is okay by you, then you go for it. But if it's too small or it's not that to your own taste or this thing, you can then shift to another one that has higher return. You understand? So the platform sets the interest rates. So it's just for you to decide which one will benefit you the most. Thank you.
Okay, thank you very much. I hope Nimat's question has been answered. If any other person with question, please signify. None. I can see in the comments that some people are complaining that they don't understand. So we're going to drop our YouTube video. You can go through it. We'll provide the slides from today's session. Just go through it, and if you still don't understand, feel free to ask your questions on the group. And then that said, I think we'll call it a day. But before we go, I'll be dropping your daily assignment on the group. And from the last assignment, most of you submitted, the engagements are really, really, really poor. Some of you don't even like your own tweets. Like you just make tweets, and then when I go to engage on your tweet, I'm seeing zero likes. Like you made a tweet and you do not like it, and you expect me to like it. So please let's work on that. And let's remember that learning does not end here. So after the session,